since last 2 to 3 years, the IT sector all over the globe has seen an exponential growth. But now something is going wrong with the IT sector. Hello and welcome to the In Focus series section of Drishti IAS. I am Aisha Singh, and in today's video we will be discussing about the bad news for India's IT sector. What it is that the information technology sector of our country is in trouble. So now first let us look at the timeline of the video. First we'll be looking at the news, then what are the reasons for the bad news that the IT sector is suffering from and what is hurting the IT sector. Then how have Indian firms done in the last few months and how have IT stocks fared on the stock exchange of India. Then what is the sectoral outlook. In the end we'll be looking into a prelims MCQ, and this topic is of relevance from General Studies paper 3 Economy. So let's get started and see the news, and the news has been taken from the Indian Express, and it says why bad results for Alphabet and Microsoft is bad news for India's IT sector as well. So mostly we will be focusing on the bad news for India's IT sector as well, because this is of relevance from us, and then we'll be seeing that how the Alphabet and Microsoft not doing well is impacting us. So first let us see what has happened. Is recently we have seen that in all over the globe the stocks of the IT sector is not performing well, and recently the shares of Alphabet Inc., which is the parent company of Google, and the Microsoft have fell sharply. So, and there is one similarity between Google and Microsoft. Who is the CEO of Google? Sundar Pichai, an Indian. And who is the CEO of Microsoft at present? It is Satya Nadella, who is also an Indian. So what has happened is the shares of Alphabet has fell by 9.6%, while the shares of Microsoft has fell by 7.7%. And these are not small companies. These are the market leaders. These are the trend setter companies. So if something happens to these companies and the shares of these big, huge monster companies are falling down, it means the market is in trouble. It means the market is not performing well. So, and this is weaker than expected earnings for the quarter ended September. And the earnings are also less and weak as was expected from these companies. And the growing concerns over the economic slowdown in the US and other companies. And seeing the shares of the big IT sector companies falling down, there is a possibility in future, and all over the world the scientists and the researchers are also talking about that there will be a slowdown that we will be seeing in the economy of the United States. And if something happens in the United States, it is bound to affect the economy all over the globe. So the American tech giant face the heat, and if they are facing the heat, then the Indian share market, which is much dependent on the United Kingdom or the developed countries share markets or the IT sector, is bound to also face the heat. Then the Indian IT sector, which depends to a large extent on business and revenue, then from the US and other developed economies. See, when it comes to the IT sector, so who's the biggest player in the IT sector when it comes to the countries? It is the United Kingdom or the South Korea or the Japan or the European nations like the Germany or the France. So we are much dependent on them when it comes to technology transfer, because these are the market leaders. We follow them when it comes to software and the information technology things. So if something is happening in these developed nations and they are not able to perform well, then it will also affect Indian IT sector market. And the North American and European market account for over 80% of revenues of TCS and Infosys. And when it comes to the biggest IT sector companies of India, the first is the TCS, which is Tata Consultancy Services, and second comes the Infosys. These are the market leaders in India. So they are also suffering because of the share market or the shares of Alphabet and Microsoft going down. And what is the biggest reasons for the shares of Alphabet and Microsoft going down? First is inflation. As we know that when in 2019-20, when the COVID expanded the inflation levels in the United Kingdoms reached all times high. So from last 2 to 3 years, the United Nations is suffering from the problem of inflation, and they are trying their level best to control inflation. And then the US Fed raising rates. Since last 1 year, we have seen that the United Nations Federal Bank or the Federal Reserve is aggressively increasing its interest rates, so that people who were investing outside, or the people who were becoming the FPI and investing outside for better returns, can invest safely in their own country. And that is what is also creating a big problem for the other market, because that is also what is making the market very volatile. Then weak growth outlook. If the stocks of the big IT sector companies will not be performing well, then the growth outlook will be weak, because they are the biggest companies of the IT sector on the global platform. So all the companies which are following them, and all the companies which are following them in all their practices and exposure, will also suffer, because if the market leader is suffering, if they are not be able to perform well, then all the countries or all the sectors which are dependent on them for something or the other are also bound to suffer. So inflation, US Fed raising rates, and weak growth outlook is the biggest reasons that why the things are happening in the IT sector. Now let's see that what is hurting the IT sector most. What is it which is not happening right for the information and technology sector? So first, as I've always told you, is high inflation and the sharp rate hikes by the US Federal Bank, and which has forced companies to reduce their IT budgets. See, if inflation will be there, then you need more money in your pocket to buy things, and that is what is making the companies reduce their IT budgets. Because when it comes to IT, then the budgets are huge, because it deals with software, it deals with technology, so it needs more and more budget. So the inflation has forced the companies to reduce their budget. And one of the major problems that we will be facing, or the world will be facing, or the IT sector will also be facing, is the problem of recession, which has been predicted by the scientists that recession or the slowdown will be coming in the economy. And the rising prices and interest rate have also increased cost of capital for American companies. Now see, what has happened is, because of inflation, there is a price rise, and when it comes to price rise, so people will also need more money in their pocket, because they will not be able to spend that much if they will not have sufficient amount in their pocket. So the price rise has also increased the cost of capital, and this cost of capital will be borne by the companies. So what will happen? The companies will try to lower down the cost of capital, and that is why they have to reduce their IT budgets. Otherwise, from where they will get all the money to spend? Then the eaten into disposable incomes. So this price rise and interest rates has eaten into the disposable income of people, and this disposable income is the income which people spend on daily basis, and this disposable income is what is majorly responsible for running the economy, or for the circulation of money in the economy. Because it is when a person will go to the market or to the shopkeeper, and the person will buy something, and then only the person will spend, and the money from one person will be given to the other person, and then the other person or the shopkeeper will give it to some third person from where he is taking all the stuff, and that is how the money is getting circulated in the economy. But if the disposable income of the people will lower down, then this circulation of money in the economy will be halted. Then this will directly impact the tech companies with regard to their products, services and ad revenues. And when the people and the companies will not be having sufficient amount, then the ad revenue, from where the ad revenue will be generated, or who will be able to pay these ad revenue? Now let us talk about that how have Indian firms done, that what is happening with the Indian IT sector firms. Then the TCS and Infosys, as I've already told you, these are the market leaders in the IT sector when it comes to India. then they have posted strong results for the quarter ended September. So this September, these companies like TCS and Infosys, they have stated a strong results. It means they have stated a profit. So TCS have a net profit of 10,431 crore and it is 8.4% growth. While Infosys on the other hand has also posted a profit which has jumped by 11%. See, you do not need to remember these numbers. So I'm just telling you that how things are happening. And I will also be telling you a contrasting thing in the coming slides also. You do not have to remember that how much profit they have gained or something else. Then IT companies are dependent on US and Europe for business and revenue because the US is the market leader, as I've already told you. See, imagine this is US who's the market leader and this is India. So it is US who is first, takes out all the things, all the softwares and all the technology, and after that India will be able to follow it. IT sector may be hit due to stronger global linkages also, because when it comes to IT, when it comes to information technology, then everything is linked to one another. Now let us talk about that how have IT stocks fared or how have IT stocks performed in our country, and that is where the things are not performing well. See, even though the TCS and Infosys have registered profits, but overall the stocks of the IT sector is not performing well. Then okay, see, stock market performance of IT companies reflects concern because the strength of a company, you can see or observe the strength of a company from how the stocks of that company is performing. If the company is good and is performing well, then the stocks will be gaining. But if the company is weak and is not performing well, then the stocks will be losing. There will be a red sign. So between April 1 and October 27, see what has happened. I'm telling you, listen to this carefully, because by listening to this, you will realize that how things are happening. Even though the company has generated profit, but overall the stocks are not performing well. See, between April 1 and October 27, the benchmark Sensex has risen by 2%. The benchmark Sensex have increased by 2%. But this benchmark Sensex, which comprises of many companies, it has risen by 2%. But when we talk about in particular the IT sector companies, then the IT sector index has fallen 20%. I am only talking about the IT sector, not talking about the overall Sensex. Only the IT sector from inside the Sensex is fallen by 20%. It means overall the Sensex is performing well, but inside that Sensex, the IT sector companies are not performing well. They have fallen by 20%. And in this fall of 20%, TCS has fallen by 15%, while Infosys has fallen by 20%, and HCL Technologies have fallen by 11.7%. And these three are the market leaders when it comes to Indian IT sector. So, and mutual funds have also, see, like this only, the Sensex have risen by 2%, but inside the Sensex, the IT sector companies have fallen, the IT index have fallen. So in this also, mutual funds overall are performing fine, but inside the mutual funds which deals with the IT sector are not performing well. So the mutual funds have significantly reduced their holdings of the software stocks. So, and at the end of the March, mutual funds had 13% of their equity in IT stocks, but by September, see, by March, there was 13% in equity, but by September, this figure reached 6.17%, almost half. It means the IT sector was not performing well in Sensex, and IT sector is also not performing well when it comes to the mutual funds. And in absolute terms, if I'll say, then in terms of the numbers, then the mutual fund holding of software stocks has come down from 2 lakh crore to 1 lakh crore. So this is where in absolute terms we can see that how the stocks of IT sector is not performing well. And TCS has also unveiled an 18,000 crore share buyback, and Infosys has also done a buyback of shares. See, don't remember these numbers. I am myself is telling you, you do not have to remember the numbers, but you just have to see that even though the overall index is doing good, the overall Sensex is performing well, but inside that, the IT sector is not performing well. You have to follow the trend. You do not have to follow these numbers. This I have written just to show you as a proof, but you do not have to follow these numbers. Just follow the trend, that how things are happening over a period of time. So see, when a company like TCS and Infosys is doing a buyback of shares, it means they are buying their own shares back, so that the reputation or the image in the sector remains fine, and that is why they are doing their buyback of shares. Now let us talk about the sectoral outlook, and that is the valuations of IT and technology companies rose sharply during the COVID-19 pandemic. See what happened when the COVID-19 pandemic happened. So what happened inside it? People were doing work from home. So during the work from home, the valuation of the IT sector rose, because the demand of the digital world or the demand of the IT sector was very high at that point of time during the COVID pandemic. But now after the COVID pandemic and the things have reopened, people have started going out. Now there is a change in the scenario. This is the most important point that you have to see and look into, is that during the COVID pandemic, the valuation of the IT sector rose very exponentially. But now that after the market has reopened and things are almost going to back to normal, now the things are not happening as before. Now people are going back to physical things. So the valuation of the IT sector, which increased during the pandemic, is under pressure to maintain their valuation, because that is where the companies are feeling the pressure, and that is where the companies are feeling the burnt. And the price to earning ratio, which jumped from 16 to 30 in 2021, is not performing well. Now the companies are under pressure to remain true to their valuation, which increased during the COVID times, and the growth is coming down, and the demand outlook will also weaken and put valuations under pressure, because during the COVID time everyone was going digital, but now people are coming back to physical things. So there is weak demand as compared to previous times, which was there at the time of COVID. But as compared to COVID times, now there is weakening demand. So to remain true to their demand and to remain the demand and to make the demand remain stable, that is where the companies will be struggling. Now what will be its impact on India? First, the volatile market, because people will be taking out their money from the market and will be thinking of investing somewhere in. FPI pullout, as I've already told you, that they will be thinking to gain more interest, to gain more profit or to gain more interest, so they will be thinking of investing their money somewhere else. And then weak demand. So if the sector will not be performing well, people will not be having money in their pocket, and people, if not be having money in their pocket, they will not be able to show demand, or they will not be able to spend. Now let us come to the prelims MCQ, and you people need to tell me the answer in the comment section. I think this will be an easy one. Consider the following statements. First is, India's IT sector depends on US and Europe market or the developed nation market. Second, the stock market performance of IT companies are under a lot of pressure. So, and the options given are 1 only, 2 only, both 1 and 2, neither 1 nor 2. So, that's all for today. Thank you so much for watching. Till we meet next time, keep reading and keep writing.